So, over the past few months, since the US attacked Iran, the oil markets have been acting very strange. So, the price initially went up as the IRGC closed the Strait of Hormuz, but eventually, after the initial peak, the downward pressure just obliterated the price. Like, especially in this place right here, it literally went down to almost the level the same as before the war, as if nothing happened, as if there is no 1.1 billion barrel shortage in the global economy. So yeah, it's like the economic theories and frameworks don't have any meaning anymore, which seems like the markets, completely ignore basic psychology, geopolitics, macroeconomics, and so on. So let's look at why that actually is the case. One of the most important reasons is breakdown of rationality. Normally, when bad news is announced, right, it has a larger impact than when good news is announced. Um, that's like basic psychology, because humans are evolved to pay more attention to potential dangers and threats and losses as opposed to gains and positive events, for example. However, now it seems that this is kind of reversed. So, news on de escalation or any mention on potential negotiations or memorandums or understanding, like whatever you want to call it, has a bigger impact than news and clear signs on escalation and intensifying of the war. I mean, at this point, even neutral news has had a bigger impact on the price than bad news. So, I mean, I would say a potential explanation for this could be that people are getting bombarded with negative news everywhere on social media, on TV, wherever. And due to its effectiveness, of course, in capturing attention, that's why it's being used so often. But because of that, we have developed an immunity. So, just like we have developed an immunity to ads, um, yeah, and it has basically become normalized and has induced a sort of apathy in most people's minds. And yeah, whether that is a natural phenomena or part of a social engineering or perhaps both is outside of the scope of this video, but we can look into that in a future one. Another possible explanation is the bubble mentality, of course, and the delusion of hope and coping, basically. People want to believe that tomorrow is better, uh, paving a way for selection bias and positive news. But individuals can be smart. However, groups of people are usually stupid. I mean, that's the rule of thumb, I would say. So the consequences of this is that the markets cannot really predict the future, and wisdom of the crowds can be seen as a fallacy. But again, this is like another topic. A second uh, important factor, I think, is the market manipulation. Of course, I mean we've seen a record amount of market manipulation in this cycle, especially in the first few months. Like every time oil prices would go above like 110 USD per barrel, Trump would come out and say something like a deal is almost reached or negotiations are progressing faster than ever before, you know. And a few moments later, of course, Iran would deny most of those claims. But this was coined as Taco Tuesday or Trump always chickens out Tuesday. Um, but it also sometimes happened on Monday and Wednesday, of course. When the prices would drop, they would strike again, and basically keeping it all balanced out. But eventually, of course, this effect would wear off. Um, However, actually much slower than I expected. So the markets just kept falling for it, even though all signals were pointing the other way, and all variables were really pointing to the obvious truth that obviously the war will continue. In addition to that, of course, we have countries worldwide releasing their strategic oil reserves to the agreed. I mean, they agreed on the goal of releasing like 426 million barrels across 34 countries. And the US alone has authorized to release like 172 million barrels, which is now actually at the lowest point since the 80s. So if you look at this graph here, it's very low now. And yeah, I mean, this can only last for so long, of course, until the SPR is completely depleted. And important to note here as well is that because of the mechanics of how oil storage works, this reserve cannot be completely released. So there has to be like a minimum that has to stay inside the reserve to keep its integrity, so it doesn't collapse. And the estimated minimum is somewhere around 250 to 300 million barrels. So it's really reaching that point of absolute minimum, without degrading and collapsing the reserves in the ground. So obviously this game cannot continue without severe consequences for much longer. Another important factor, of course, is the destruction of refineries in Russia. This is actually a factor I didn't look at initially, but it's a very important one apparently. So yeah, since the start, I mean, especially since the start of the US-Iran war, the drone attacks by Ukraine on Russian refineries surged by a lot. And during the same period, more footage kept coming out of refineries sparking up in flames all across the world. Perhaps that one was due to the fact that more mainstream attention was paid to oil infrastructure, or perhaps it's part of a bigger plan. But on that claim, I mean, more research is needed. Regardless, the increased attacks on the refineries basically reduced a lot of supply of the refined products like diesel, gasoline, and all kinds of jet fuel and so on. And of course, Russia has like the third largest refinery capacity in the world, which now of course is heavily reduced. But because of that, basically Russia was forced to sell more of the crude oil while having a shortage of the refined products. Basically right now at a 20-year low. But the crude exports, of course, have increased, and this increase, it's suppressed the prices as well. So, of course, Ukraine does not have the ability or tools to do this by itself. So, most of the intel guidance, and most importantly, the permission was given by the US and NATO. And by doing this, the US basically can ensure suppressed oil prices while it keeps its war with Iran going. So strategically, it's basically very important. This is primarily the case because the US economy and system is incredibly, it's basically hyper financialized. So it is not just influenced, but dictated by the markets. And because of that, its foreign policy is also, of course, heavily influenced by the markets. And I would argue actually dictated by the markets. So, but that's of course also a topic for another time that needs to be discussed. And yeah, so basically, what does this all mean? I mean, the big problem is that there has been no demand adjustment, especially in the Western world. So I know there are some countries in Asia, I think like Thailand and Vietnam, that did impose restrictions and even rationing. However, in the most parts of the Western nations, that is not the case. So life just goes on as if the supply shock never happened. And remember, it's like 1.1 billion shortage right now. What this means is this is incredibly dangerous because most people and nation states are living in a bubble, and reality, like the physical reality, is about to hit soon. And whether this is all part of a play against China or a globally engineered transition to a world without oil and Agenda 2030, what is important is what we can do about it and how we can adjust our expectations and portfolios. So, for all the reasons discussed, um, I, of course, believe that oil prices are going up. So, as we've seen right now, they are already rising, but I expect them to go way higher, above 150 USD per barrel. Now, to be honest, I expected it to do such a move here as well, around May, I would say. But yeah, I did not take into account a lot of the factors that I just discussed, like market manipulation and so on. So I'm allocating a small portion of my assets into oil futures and refined products futures, like heating oil and diesel. They probably will continue to go up. And additionally, hard asset commodities like precious metals will most likely increase in value as well. I'm specifically focusing on gold and silver, because I mean we have seen a huge market correction here as well. So I think the only way it can go is up from now on. So, but yeah, especially gold, because aside from its main role being a hedge against uncertainty and volatile times throughout the whole history, there's another huge reason to be bullish, which is it's that central banks and large institutions have been buying and expanding their gold assets all over the world, but especially China. And this has potentially to do with the transition to a new world currency. However, that's again a topic for another time. But yeah, I basically think precious metals are definitely going to continue to increase in value. I am very careful now with the stock markets, like the S&P 500. I'm still invested, but downsized and still very careful. I'm not opening any new positions because I believe we're in a huge bubble, mostly because of AI, of course. But yeah, so that's about it for this topic, for this video, and see you in the next one.